the idea that we are going to get that inflation data, does that ease some concerns that people had? I mean, it didn't stop the markets from hitting new highs in all fairness, but does that ease in your mind some concerns that we're going to get that data and the Fed won't be, quote unquote, flying blind, or at least not as blind as we previously thought?
Yeah, I think that's true. I think one of the concerns has been that, look, the economic backdrop is somewhat difficult to read anyway, even with the data, because there's so many different dynamics at play. But it's even worse if you don't have anything at hand to help guide the Fed. So I think at least getting the inflation data would help. I do think that the key thing really at the moment is still the labor market, but at least we are getting some private market indicators which give us at least a sense of the way that the job market is moving.
The action in the market. The fact that we saw gold rally above 4,000, now it's back above 4,000. We saw people going into cryptocurrency. At the same time, we did see the market hit some new highs before the pullback we saw yesterday. What does that tell you about investor confidence, that we're seeing investors go to safe havens and tech at the same time, and also in some other frothier parts of the market?
Yeah, it's definitely been a somewhat unusual dynamic. Typically you see gold do really well when there's times of real concern. So, for example, if the equity market was struggling, you would typically see the gold market doing pretty well. And yet at the moment, you're seeing both of them performing extremely well. Now, I think one of the things that we are seeing is that there has been some investor attempt to try and kind of avoid, or at least hedge against, the political uncertainty in the US, concerns about inflation risks. And that's what's been helping drive gold. And to your point, the S&P 500 and the general US equity market continues to be driven by tech, which to some extent is, I think, a bit of a safe haven play for investors. They want to be looking at areas of the market which are going to be continuing to perform well, even if the macro backdrop does weaken a little bit.
All right, speaking of the current market, we're actually just about to hit the 3-year anniversary of this particular bull market. Some great stats came out from the Carson Group. I just want to bounce these off of you. The current gain in this bull market's about 88.8%. Just kind of, ironically, 3 numbers there. According to them, the average duration of a bull market is about 5.5 years. The average gain is about 191.6%. So even though we're doing some hand-wringing in recent days about economic reports and about inflation and about the Fed and things like that, in your mind, is it all just much ado about nothing? Is this bull market still intact? And do you see it going on at least to the average, or at least trending that way?
Yeah, we do. We're still quite positive about the outlook. As you said, there are some risk on the horizon, and there's always going to be a few niggles in the market which are being affected by the lack of economic data. But certainly, if you're looking out over the next 6 months or so, with the fact that you have got Fed cuts coming, in addition to deregulation, some of the tax refunds that we expect to see in Q1, that should help continue to support this very robust earnings growth backdrop that we've seen, a kind of a drop in tariff uncertainty as well. And that should mean, as long as you have robust earnings growth, that does mean that the equity market has some upside. There's always going to be volatility, and there will be some potential for pullback when you have these kind of valuations. But really, the fundamentals are pointing at a continued solid outlook for 2026.